Happy Monday, everybody. Welcome to a holiday shortened week, split right down the middle. Markets closed on Wednesday for Juneteenth. Today is June 17th, 2024, and this is your Monday market update. As always, for a Monday, let's review the notable actions from last week and let's preview what's ahead this coming week. Monday had stocks open a bit lower, but they did eke out a small gain. As markets started the week, there was some angst about the EU Parliament as well as France and the snap elections there. Uncertainty in Europe equals bond yields creeping up there, and being the global market that it is, we saw yields go up here as well. Markets then went back to focusing on the news of the day, Worldwide Developers Conference, known of course as WWDC for Apple, and their AI announcement, as should be expected of one of the largest companies in the world. They are calling AI Apple Intelligence. And although the stock was down on Monday, spoiler, it didn't stay that way, stayed down that way, as the AI will only operate on the iPhone 15 or later. So upgrade cycle was the words of the day after the close. Overall, there was not much to report on Monday. CPI as well as the Fed meeting on Wednesday and PPI on Thursday. So stay tuned. Markets were just positioning. Not big moves in the markets, but enough for some more records. The Dow was up just under 1/4%, S&P up 1/4%, and the NASDAQ up 1/3%. The latter two indices at record highs. We did get the 10-for-1 stock split from NVIDIA, so that was news. It always is when your position goes from $1,200 to $120 until you realize that your share count is up tenfold. Not really news. So stocks started Tuesday like it did on Monday in the red slightly, more EU concerns. Then that passed. Then Apple, again, down after the market Monday and then down into the open on Tuesday, finally got the legs and helped to move the market higher. With the weightings of Apple in the market, that was pretty much the driver. The Dow was down, though, 1/3%, S&P up 1/4%, and the NASDAQ up almost 1%. To put a finer point on the Apple weighting, let's do a quick update. Per Market Watch, for the first time since 2000, Microsoft, NVIDIA, and Apple account for more than 20% of the value of the S&P 500. The NASDAQ index is even more so, 41% in those three stocks. And if you think that the rising tide lifts all boats, unless your boat is the S&P or NASDAQ index, not so fast. The S&P has not posted a 2% loss since February, but in the past 3 months, per the Wall Street Journal report, more stocks have had 10% daily swings than almost any other time. Only once in the past 25 years have stocks been so erratic while the market seems smooth on the surface. So the rally continued on Wednesday and on micro and macro data. First, the micro side, Oracle had AI-related earnings, of course, and markets loved it, taking the stock up. The macro side was, of course, CPI, and that the Fed later in the day. The CPI was better than expected. The Fed report was noisy and had some mixed messages, but expectations came out unchanged, by the markets at least, 1, maybe 2 cuts this year. Recall, I maintain this will not happen, just my opinion, but I think if you see anything, you're going to see 1 post-election cut, but my thoughts are that they'll hold off till 2025. By the end of the day, the Dow was down ever so slightly, S&P was up almost 1%, and the NASDAQ was up 1.5%. See how that works? Major weightings move and the indexes move. And remember, that works both ways. Continued green on Thursday with more on tech earnings front, this time from Broadcom. And isn't it interesting that these late comers to the earnings season are making markets move? Not enough to move things too much, but keep the green going at least. Recall that I've been telling you that this is my opinion that we will return to the fundamentals, and that's what we're seeing. Maybe high multiples on those fundamentals, but that is the focus nonetheless. PPI was out, cooler than expected, and that was good for the inflation gang, but jobless numbers were also out, and they were at a 10-month high, so that kept things muted on the day. The Dow was down a bit under 1/4%, S&P up 1/4%, and the NASDAQ up 1/3%. Friday brought some digestion in the markets, some resting from all that Fed and inflation watching. Consumer sentiment was down, and European political news weighed on things a bit. Inflation expectations also were pretty much in line. We did get the first post-Fed meeting Fed head in Loretta Mester, and she indicated that monetary policy was in good shape and not calling for rate cuts yet. I agree with that. On the other side of the only 3 stock narrative, by the way, 16 S&P stocks hit 52-week highs on Friday as well. By the end of the day and the end of the week, for Friday, the Dow was down 1/4%, S&P was down just a hair, and the NASDAQ was higher for the 5th straight day, up 1/4%. For the week, the Dow was down 0.5%, S&P up almost 1 2/3%, and the NASDAQ was up 3.25%. All right, that's the setup. That's for last week. Here's the setup for this week. Quiet on some fronts, but not on others. Two main events. One, retail sales, and that'll be tomorrow. And that's big because we know the consumer is king, about 70% of the economy, king. So it will be important to see if we get more data to suggest that shopping is slowing. We saw some of that again last week with Restoration Hardware being the latest. The other event, or events, of course, are the Fed heads are back. For this week, we'll get a bunch. Williams, Harker, Cook, and that's just today. By the end of the week, we'll also get Barkin, Collins, Logan, Kugler, Musalam, and Goolsby and Kashkari. Some additional eco data will also come out this week, including some housing data, but those are going to be sort of muted and probably ignored. Remember, as I started out, midweek rest Juneteenth, so we'll see if a midweek hump day break makes a difference. For now, please keep in touch. Let me know if you have questions. Have a great week.